All right, let's talk about Western Digital. Wow, they just dropped a monster quarter, and the market is loving it. We're going to break down the numbers, figure out why this is all happening, and what it could mean for the stock. So, let's dive right in. So, the closing bell rings, the numbers come out, and bam! Western Digital didn't just beat expectations, they absolutely crushed them. And you can see the market's reaction right there. Instant, decisive. We're talking a pop of nearly 9% on some seriously heavy volume. You know, this wasn't just a good quarter. This was a statement.
Okay, so what in the world fueled a move like that? Let's get into the headline numbers that really got everyone's attention.
I mean, look at this. It was a total clean sweep. On the bottom line, their adjusted earnings per share came in at $1.78. That blew past what Wall Street was expecting by 19 cents. Then you look at the top line, revenue, $2.82 billion. That's a solid $90 million beat. But honestly, the really eye-popping number here, that 27% year-over-year growth, that tells you the business is just firing on all cylinders, hitting a whole new gear.
And it's not just about selling more stuff, right? Look at how profitable those sales are. Their non-GAAP gross margin hit almost 44%. I mean, that is a huge jump. We're talking over 6.5 percentage points higher than just a year ago. So what does that tell you? It tells you they're selling the good stuff, a much richer, way more profitable mix of those big, high-capacity drives.
And all that profit, well, it's turning directly into cold, hard cash. The company spun off an incredible $599 million in free cash flow, and that's just this quarter. That's even after a big tax payment. This thing is a cash machine, and it is running at full throttle.
So management is obviously feeling pretty good that this isn't just a one-time thing, and they're putting their money where their mouth is. The board just jacked up the dividend by 25%. That's a huge vote of confidence, a really strong signal about how they see the future playing out.
Okay, so we've seen the what, the incredible numbers, but what's the why? What's the engine driving this whole train? Well, the story behind the numbers is even more fascinating, and it really all comes down to two letters, AI.
You know, the CEO, Irving Tan, he really put it perfectly on their earnings call. He said, look, data is the fuel for AI. And these AI models, they don't just use data, they create unbelievable amounts of new data. So where do you put all of it? Well, for storing massive data sets, reliably and cheaply, good old-fashioned hard disk drives are still the king of the data center.
In this chart, this tells the whole story. Just look at it. A whopping 89% of their revenue is coming from their cloud segment. And who is that? That's the hyperscalers, the big guys building out the massive data centers that power AI. I mean, at this point, Western Digital is basically a pure play investment in the biggest, most powerful trend in tech today.
The thing is, the demand for storage, we're talking about exabytes here, just unimaginable amounts of data. It's so insane that customers are doing something you almost never see. They are locking in their orders way out into the future, giving the company incredible visibility.
And this isn't just some vague promise. Check this out. Their top 7 customers have put in firm purchase orders all the way through the middle of 2026. 5 of those 7 have locked in orders for the entire year of 2026. And get this, one of the biggest hyperscalers in the world signed a binding agreement to buy drives all the way through 2027. I mean, that kind of visibility, that kind of guaranteed demand, it just totally de-risks the whole story.
So, when you have a backlog that looks like that, it's really no surprise that management is guiding for more good times ahead. Let's take a look at what they're expecting for next quarter and the tech they're building to keep this all going. Okay, so for Q2, they're pointing to another step up. Revenue guidance is around $2.9 billion. They think those juicy gross margins are going to tick up even more to 44.5%. And that means earnings per share should come in around $1.88. The key takeaway here, the momentum isn't slowing down. If anything, it's accelerating.
And here's how they plan to keep up with all that future demand. They've got a clear roadmap. First, they're speeding up the rollout of their next-gen EPMR drives. That's kind of like the next evolution of what they have now. But the real game changer, the big one, is HAMR. That stands for heat-assisted magnetic recording. It literally uses a tiny laser to heat up the disk so they can cram way more data onto it. And they're pulling that schedule forward, starting qualifications in the first half of 26. This is their path to building even bigger drives and staying on top of the market.
All right, so we've looked at the amazing quarter, the strong guidance, that incredible customer visibility, so now it's time for the next call. And based on everything we've seen, our rating is outperform.
And just so we're all on the same page, an outperform rating simply means we expect the stock to do better than the overall market. And in this case, boy, is the reason why pretty clear.
The bull case here is just so clean. You've got this massive structural demand from AI. You have margins that are clearly expanding, and you have that customer visibility that we just talked about that's almost unheard of. Now, are there risks? Of course. There's always a risk of a macro slowdown or a hiccup in their tech roadmap. But right now, the demand signals are just screaming so loudly that they really seem to overwhelm those risks.
Okay, so let's put it all together into a potential trade idea. But first, the really important part, a quick reminder that this is for informational purposes only. It is absolutely not financial advice.
So the idea here is pretty straightforward. Go long the common stock. With their earnings power ramping up like this, there's a really strong argument to be made that the stock deserves a higher valuation, what we call multiple expansion. The things you're going to want to watch for are positive updates on that HAMR technology and any announcements of new long-term customer deals. We see this as a story that plays out over the next 12 to 18 months, really centered around that successful ramp of their next-gen tech.
And I'll just leave you with this one last thought to chew on. Both the company and its biggest customers are telling us that supply is going to be tight well into 2026. So with that kind of locked-in demand, maybe the real question for the next year or so isn't if Western Digital is going to beat expectations. Maybe the real question is by how much?
That's definitely the question we'll be watching. And as always, final reminder, please remember this is not financial advice. You've got to do your own research before making any investment decisions.